NIO just flirted with the upper reaches of its range, climbing intraday to $7.68, just shy of its year-to-date high of around $7.71. That move isn't random. It tells us momentum, sentiment, and technical levels are all lining up for a potential breakout. But as always with a stock like NIO, the real question is whether this kind of strength has staying power or if it will fade like previous rallies. Earlier this week, NIO closed Thursday at $7.47, capping off a strong session where it gained nearly 5%. That came after days of bouncing between support around the $7 mark and resistance just below the highs. Buyers had been testing the waters, but until today they hadn't really pushed into that upper resistance zone with conviction. The fact that NIO got as high as 768 shows just how aggressive sentiment has become, with traders trying to force a run beyond those previous highs. But it didn't quite happen. The stock faded back after hitting that level, closing below the intraday peak. That fade is important. Whenever a stock approaches a big ceiling like this, there's usually a cluster of sellers waiting. Some are locking in profits from the recent run, others may be adding new short positions, betting the ceiling will hold. The fact that NIO was turned back right at the doorstep of its year-to-date high suggests the battle for control is still very much alive. So what fueled this surge to begin with? Part of it is simply technical. Stocks often act like magnets around key levels. When a price approaches a year-to-date high, it tends to draw in momentum traders and technical buyers who don't want to miss the next leg up. On top of that, there's usually a wave of short covering as those betting against the stock get forced to buy shares when the price climbs closer to resistance. That dynamic alone can add fuel to a rally. At the same time, broader sentiment toward Chinese stocks has been supportive. In particular, Alibaba has been making headlines with its massive new artificial intelligence model and a renewed commitment to heavy AI investment. That news has helped lift the entire Chinese tech sector, and whenever investors start to feel more confident about China's big tech names, it often spills over into companies like NIO. Even though NIO is in the electric vehicle space, it's seen as part of that broader group of high-growth Chinese companies that rely on innovation, technology, and strong consumer demand. There's also a product story at play. NIO has continued to generate buzz with its new ES8 SUV, which has reportedly attracted around 100,000 cancelable orders. Whether all of those turn into actual deliveries is uncertain, but the number itself reflects real interest. Pair that with analyst commentary, like Citi recently putting NIO on a 30-day upside catalyst watch after the ES8 launch, and you get a sense of how traders are starting to think differently about the stock. Even the fact that capacity for the ES8 is reportedly sold out for the next year gives buyers some confidence that demand is healthy, even if execution remains a question. So when you add it all together, momentum from technicals, optimism from Chinese tech, excitement about products, and analysts waving the green flag, you had the perfect recipe for NIO to make that push to 768. The question now is what to make of it. Hitting that intraday high so close to the year-to-date peak is a psychological event. It's a signal to the market that buyers are willing to test resistance, but it's also a reminder that sellers are still very much in control at those levels. Breaking through to a new high requires conviction and volume. Without those, a stock often bounces off resistance and drifts lower again. For NIO, the reaction from here will tell us a lot. If the stock can put together another strong session, clear the 771 high, and close convincingly above it, that would validate the breakout. From there, the next targets could be $8 or even higher, especially if short covering accelerates. But if the stock struggles again and fails to hold above 750, it wouldn't be surprising to see it pull back towards $7 or even back into the 680 range. There's also the possibility that NIO simply chops sideways for a while, consolidating in a band between 7 and 770. That wouldn't be the worst outcome. Consolidation can actually be constructive, allowing a stock to build energy for a more decisive move later. What matters most is what happens over the next few sessions. Was today's move backed by strong volume, or was it a lighter traded session that made it easier for the price to spike intraday? Did the stock finish close to the highs of the day, or did it fade hard into the close, suggesting weaker conviction? And do we see follow-through from broader Chinese tech stocks, or was Alibaba's rally more of a one-off? It's also important to keep fundamentals in mind. NIO's challenge has never been demand. It has shown plenty of consumer interest across its model line. The hurdles have always been execution, delivery timing, and dealing with heavy competition in China's EV market. Price wars with Tesla, BYD, XPeng, and Li Auto remain intense, and margins are under pressure. On top of that, The recent $1 billion equity raise still lingers in investor minds, even though it bolstered the company's balance sheet. These risks don't disappear just because the stock is making a run at new highs. Still, the setup here is intriguing. With NIO Day 2025 just around the corner on September 20th, the company will soon have the opportunity to showcase its innovation pipeline, update investors on new products like the ES8, the Onvo L90, and the Firefly brand, and reinforce confidence in its growth strategy. Events like this often serve as catalysts, and the stock's push toward a breakout just ahead of NIO Day adds even more intrigue. So where does that leave investors? The cautious bull case goes something like this. NIO has bounced strongly from support. It's now testing its year-to-date highs. Sentiment around Chinese tech is favorable thanks to Alibaba's AI surge, and analysts are flagging upside potential. If momentum carries it through resistance, there's room for a meaningful breakout. The bear case, on the other hand, is that resistance proves too strong, sellers reassert control, and the stock retraces back to the low 7s or high 6s. Either way, the 770 level is now the key to watch. Break it, and the stock has clear skies to the upside. Fail again, and the consolidation continues. That's the battleground for the next chapter in this story. Longer term, the outlook remains mixed but hopeful. NIO has strong demand signals, a growing battery swap network, and a solid product pipeline. It also has financial flexibility after its equity raise. But execution risks, fierce competition, and sensitivity to Chinese macro policy are all hurdles that can't be ignored. That's why many investors remain cautious, even as they lean bullish. In the end, today's intraday high of $7.68 isn't just a number. It's a message. It tells us that buyers are willing to step up, that sentiment is swinging back in NIO's favor, and that the market is watching closely to see if the company can finally break through and hold new highs. Whether this marks the start of a new leg up or just another failed rally attempt will depend on what happens next. For now, the takeaway is clear. Momentum is alive, sentiment is improving, and the ceiling is within reach. All eyes are on 771.